Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
A very good evening to you and welcome to India Business Hour. I'm Kritika Saxena and Shireen is also joining in from Delhi. Hi Shireen, lots of action over the next 60 minutes lined up.
No, absolutely. We do have a packed show lined up for you, but let's start with the top story, and that continues to be what is happening in Turkey. It has kept investors across the world on edge, including in India, where the rupee has hit a record low. In fact, just 7 paise short of touching the $70 mark. Now, there is a lot of speculation on what this could actually mean as far as emerging market currencies are concerned. Let's just take a look at how markets across the globe are reacting. And let's start with the picture across Asia. The Nifty tumbling below the 11,400 mark as shares in Shanghai, Tokyo also saw some sharp cuts, and shares on Wall Street have opened in the green, but the gains remain capped. Europe is throwing up a mixed picture as markets wobble between red and green. Staying with emerging market currencies and the kind of fall and volatility that we're seeing there, head of emerging markets at Morgan Stanley and the chief strategist Rupee Sharma believes that what is happening in Turkey with the lira is somewhat expected, but what could really damage currency markets globally is if the yuan begins to track this action. Take a look.
Turkey's been doing everything wrong that you can find in the economic textbook. It's been relying too much on foreign capital, huge current account deficits, massive amounts of debt, which this country took. And then, of course, you have on top of that a political leadership that is following a very unorthodox policy. So I think that this has possibly been the most obvious crisis that I can remember in emerging markets. And I'd be surprised if there are too many people caught up in this.
People said that about Thailand, though. I mean, there were loads of bubbles, the real estate bubble in Thailand. I mean, there were all these problems emerging over years that all of a sudden suddenly hit with the speculative attack on the Thai baht. This is how crises developed. You could say the same thing about the real estate market in this country in 2008.
No, that's absolutely correct. But I think we have to go to what's the source of why this has happened in Turkey just now. I mean, my point was that this has been in the make for a very long period of time, but you're now getting like to the absolute key point here, that why has it happened just now? And I think that this goes back to the fact that every time we have higher interest rates in the US and we get a stronger dollar, that combination has always been a lethal combination for weak assets across the world. So the Turkish currency in particular, like I was looking back at it, 1994, 2001, 2008, every time the Turkish currency has taken a bath because it's always been most exposed to foreign funding. So I think that is the critical point now, which is that what is this going to mean for other countries? And in this regard, I think the single most important country to watch just now is China. And that's because China has been on a de facto currency peg with the United States. Its currency has been weakening. They have seen capital outflows, nothing as serious as we saw in 2015, 2016, but we have seen some of that. So for this to become a true contagion currently, what you need to see is China, because if the Chinese currency begins to spin out of control, then you have a full-fledged global economic crisis of the kind you had in 97, 98 in play.
Well, that's Rupee Sharma, Morgan Stanley's emerging markets head, saying that this could turn into a contagion if you see the yuan go off track. But let's head back home to some good news on the macros. Retail inflation slowing down to its lowest level that we've seen in the last 9 months. Let me quickly take you through the breakup of the inflation internals. Vegetable prices took inflation in July to just over 4.1%, while a CNBC TV18 poll was expecting inflation at about 4.5%. This July number is just above the RBI stated goal of 4%, so a pleasant surprise there for investors. Let's listen in to some comments.
Pressure on the currency markets and the implication of that on inflation is also very relevant for the Reserve Bank of India. So I think the safeguard has to be earlier than later, in my opinion. So I would not take away the October hike from the table immediately in a swift go, just by looking at this inflation number and sort of look at more the credibility point that the RBI had been sort of mentioning in a very significant way.
The rate hike is not out of the table. We don't really expect a prolonged pause from the RBI. Reason being, I think they are focusing on June next year. They're looking at a long-term inflation trajectory, and they believe there is a gap, there is a transmission gap in terms of monetary policy working. So they would like to act soon, but purely from inflation perspective, they won't get a clear picture by next month. A lot would depend how the currency behaves, how the emerging market risk pans out, because that would be one important criteria in terms of imported inflation to consider. So October is not out of the table, but a lot depends on the currency risk.
Okay, so some relief there on the inflation front, but it is now time for us to unpack both these stories. Latha joins us now. Latha, let's start with the rupee now. Given what we are seeing with the lira and other emerging market currencies, what's the prognosis for the rupee? What are people telling you?
Well, let's first get to the link. As the lira fell, what happened was that you saw a weakness in the euro because of European banks' exposure to Turkey. That exposure is about $195 billion and largely concentrated in 2 or 3 banks. Now, the fall of the euro, euro is a big component in the composition of the DXY, the dollar index. It's about 57%. So when the euro fell, the DXY became strong. 96 plus is a DXY, is a dollar level we have not seen. I mean, we last saw it in early 2016 and then sometime in early 2015 or 14. So it's the rupee, the dollar strength that pushed down all the emerging market currencies, and among them, of course, the Indonesian rupee also fell by about 0.8%. The rand has problems of its own. It's fallen nearly 3%, and India fell about 1%. The positive for India is that India is still much stronger, is viewed as a very strong economy and currency, and people tell us that there were even, long rupee, short won, long rupee, short Indonesian rupee are trades. So relative to emerging markets, India was still seen strong. But India has its own problems in the sense of a large current account deficit, 2.6% compared to under 2% about a year or couple of years back. So it's possible that when one sees a large current account deficit like Turkey getting bashed up, there is a bit of a sentiment impact and people take off their bets. It's very tempting to take off the bets from emerging market currencies and then watch. That's what has happened today with people, buying dollar hedges, those who are invested in India. It's possible that the market will only wait for RBI action. Today, the RBI was not there traditionally at that 65.10, 65.30 mark. There was a gap up opening of the dollar. And at 65.60, the rupees, RBI seemed to have come, but then was not there very emphatically. And then, it went straight. Tomorrow, if the RBI's hand is seen at around 69.90 or 70, then it's possible that we're not going to see too much weakness. Now, there are too many moving parts. If the yuan falls much further, as Ruchir Sharma says, or if the dollar index becomes very strong, then there could be more fall. So there are 3 variables really to watch. What happens to the dollar index, what happens to the yuan, and what RBI is doing.
Well, those are important questions, Latha. But let's move away from the rupee to talk about inflation. Just a tad over 4%. How much of a surprise is this going to be for the markets?
Well, the number is definitely much lower than what the CNBC TV18 poll threw up. Our poll said 4.5% for the month of July, the inflation number. And some other polls were looking at 4.4, 4.45. But nobody gave us a number as low as even 4.2. So 4.17 is going to be an extremely pleasant surprise. The expectation is that with such a serious food disinflation, the prime reason for this big fall in the CPI number is the food disinflation, which has fallen to 1.37% compared to, around 3% that it has been over the past several months. So thanks to this, it's the inflation number for the next month, August, is most likely to be under 4%. So when the RBI goes into its monetary policy meeting in early October or end September, it will have behind it a number which is below 4%. That will be the last August number. So the market tomorrow will price in the fact that there is unlikely to be a rate hike in October. Now, if there is even more disinflation in the August number, then perhaps it will remove all fears of a rate hike. But definitely tomorrow the bond yields are likely to move down from the current 7.82 levels probably to a little under 7.8%. Immediate impact on the rupee may be a little difficult. It will depend on so many factors like the yuan, like the lira, like the dollar index, and like RBI action. So rupee we cannot be sure, but the bond yields are likely to move lower.
All right, Latha. Well, we'll track both the rupee as well as inflation. Rupee more important for trade tomorrow. Appreciate you joining us with both those stories. Now on to a CNBC TV 18 exclusive. We learned that the government is considering an overseas listing possibly for ONGC. It could be London, it could be Singapore, and it could be so that ONGC gets access to global funds as well as gives the company global reach. Anshu Sharma, who's breaking that story for us, joins us. Anshu, what are you hearing on this possibility of an overseas listing for ONGC?
That's right. We understand from government sources that government is mulling listing of ONGC in a global stock exchange. We understand that global exchange could be Singapore Stock Exchange or London Stock Exchange, where ONGC listing could happen. The idea is to basically better access of funds, better and cheap access of fund, and global reach of ONGC across the world. Remember, there are a lot of M&A activities which happen both in upstream and downstream companies globally, and in 17-18 budget, FM Arun Jaitley had said that India needs an oil giant which could compete globally. So this idea could be to make ONGC a global company which could compete in the mergers and acquisition globally, like BP and Shell, which operates globally. We also understand that the last week, Prime Minister had a meeting with the energy and mining sector government officials with regards to target, and that's when the idea of ONGC listing abroad was discussed. Remember, ONGC is the largest exploration and production company in India and has some 41 projects globally via ONGC Videsh. We reached out to ONGC for a comment, and ONGC has replied that they would not like to comment on the story. Back to you.
Okay, Anshu, appreciate you joining us with that CNBC TV 18 exclusive, an overseas listing possibly for ONGC. The jury's still out on what that will do for the company. But let's talk about another significant story, and this one comes in from the banking space. The former Managing Director and Chief Executive Officer of Allahabad Bank, that's Usha Subramanyam, will be removed from service effectively today. Now, the government has also given a go-ahead to the CBI to prosecute not just her, but also Sanjeev Sharan for their role in the Punjab National Bank Nirav Modi fraud. Let's go across to Sapna Das now for more details on this story. Sapna.
Well, very quickly, I'll first read out certain lines from the formal notification that the Department of Financial Services has put out in terms of the exit of Usha Subramanyam, or rather her removal from office. Let's also keep in mind that today was her last day at work, so she was actually effectively retiring from tonight onwards. So the line that is coming to the government is that had they not taken this decision, then tomorrow the government would not have been able to act at all. So very quickly, as is being pointed out, the notification says that why she should not be removed from office for having failed in exercising proper control over the functioning of Punjab National Bank while serving as its MD and CEO, which enabled the fraud in the bank through misuse of SWIFT at the bank's Brady House, Mumbai branch to persist undetected for several years, snowballing into a large account. So basically, she's being held responsible for the Brady House, debacle, for the SWIFT debacle, and we know the story from there onwards, how the Nirav Modi scam unfolded. So that's the reason why she has been removed. Not just this, earlier also the CBI had, basically come up with this kind of a thing from the government that they would like to go ahead with the prosecution, but a formal nod is definitely required. That nod has also been given by the government. Sanction for prosecution has been given to CBI so that they can move against Usha Subramanyam. Definitely, now that she has been removed from the office officially, it's understood that the post-retirement benefits will stop, because she had been divested of charge on 15th May, but she was still on the payroll and she was still getting her salaries as the dues are always given unless the final termination order is served. Not just Usha Subramanyam, the sanction for prosecution to CBI has been given by the Finance Ministry in case of Sanjeev Sharan as well. So he was the former ED at Punjab National international banks. So these two names are there. But it will not end here, because we are given to understand that possibly some queries are also being raised, or some similar, requests have come in from Reserve Bank of India, and probably over the next couple of days, a few more names are going to crop up, and probably the sanction for prosecution at that level also will be given by the Finance Ministry to the RBI.
Okay, Sapna, appreciate you joining us. So that order effective from today. But let's talk about the beleaguered airline, that's Jet Airways. What we are given to understand is that the company is not just looking at curtailing its expenses, it's also looking at selling a stake in Jet Privilege, which is its miles program. Kritika has been tracking that story. She joins us now with more details. Kritika, over to you.
Shireen, what my sources are telling me is that the executive committee, which has been appointed to get back with a turnaround plan for the company, has finally cleared the possibility of finding buyers for Jet Airways, 49% stake in Jet Privilege. The frequent flyer program is owned by Jet Airways as well as Etihad Airways. So Etihad still holds about 50.1%. Just to put this into perspective, when Etihad had bought that stake in the company, in the program rather, that was valued at about $150 million, taking the overall valuation to about $300 million. Now, as per a global consulting management On Points report, the stake that Jet Airways has is valued at about $550 million, taking the overall valuation of Jet Privilege to $1.1 billion. So we understand that internally they have consulted that report, and as per their internal studies and targets, they are hoping to get at least $450 to $500 million through the sale. Now, who are the prospective buyers? They are hoping to reach out to private equity and financial players. They would prefer bringing in a financial investors in place of a global or a domestic carrier, since bringing in a financial investor and not a strategic one will enable Jet to continue with the operational management of the of Jet Privilege. So that is what we are picking up from our sources. The company did get back to our query saying that they did not want to comment on market speculation. But Shireen, that's not the only Jet story that we've been tracking today. The airline has also denied rumours regarding the company turning default for some banks.
Well, that is right. They have sent in that clarification to the exchange saying that it continues to be a standard account and there is no default. We'll get to that in just a bit. But from one beleaguered airline to another, Air India's woes also continue. Not just delaying salary payments, but now we've got the Indian Airline Pilots Association writing to the government saying that 23% of Air India's present fleet has been grounded. The association in a letter says, and I quote, that $3.6 billion worth of aircraft are currently lying idle due to poor maintenance and management. Let's go across to Ashpreet Sethi now for more details. Ashpreet, serious charges being made there by the Pilots Association. What else have they raised?
Quite a scathing letter that has come from the Commercial Pilots Association that has in fact gone to Air India CMD, and they have alleged, and I quote from the letter that has gone, that almost 23% of Air India fleet is grounded and aircraft worth 25,000 crore rupees is lying idle due to lack of spares, end quote. Now this is what the pilots have told the Air India CMD. We had sought a response from Air India and they have given us an elaborate response saying that the engineering team is giving them adequate aircraft as far as meeting with passengers' requirement is confirmed. In fact, they've also gone ahead and said Air India accords topmost priority to the safety of the aircraft and its fleets. It's a common practice for every airline to ground some of its aircraft for routine maintenance. Now remember, the pilots had raised an issue as to how maintenance is not being done, which is leading to massive losses and grounding of these aircraft. There are massive cancellations which are happening as far as Air India is concerned. Now it remains to be seen whether the ministry and the Air India CMD will take stock of what the pilots have to say.
Okay, Ashpreet, thanks for taking us through that. Of course, negotiations will continue now, so we need to wait and watch out to see how those conversations transpire. But let's get back to Jet Airways. The airline, as we were saying earlier, has denied the rumours regarding the company turning default for some banks. Now, the statement that Jet Airways has sent says this, and I quote, "We wish to reiterate that all our accounts with lenders are standard and there is no overdue in any of our accounts. There have been no delays in discharging any of our loan obligations to any of the lenders. In fact, our bankers have issued a certificate to this extent at periodical intervals. The company's account has been consistently standard over the last several years," end of quote. Moving on to the other big story this evening, 3 cities in Maharashtra, Pune, Navi Mumbai and Mumbai are the most livable places in the country. Now this according to the Ease of Living Index that was released by the Urban Development Ministry today. The index ranks a total of 111 cities based on 4 key parameters: governance, economic factors, social infrastructure and physical infrastructure. So where do the other metros stand when compared to the maximum city? Chennai is ranked 14th on the list, while Bengaluru comes in a distant 58 on that list. New Delhi, meanwhile, is ranked at 65. Kolkata, though, did not participate in the index. A quick look at the Hall of Shamers as well. Rampur in Uttar Pradesh is the best performing city on the Ease of Living Index, followed by Kohima. 3 cities from the state of Bihar, capital Patna, along with Bihar Sharif and Bhagalpur, complete the bottom 5. We in fact spoke to Hardeep Singh Puri, the Urban Development Minister, who was present at that event where the cities' rankings were announced. Here's his rationale on the ranking and some important comments on why some cities figured where. Take a look.
This is not a one-time exercise. It's not as if we had conducted the exercise now and this is over. This is a story which is going to be continuing. It will unfold, and as cities and municipal bodies and urban local bodies compete under different examination. There's a Swachhta Sarvekshan. The first was carried out in 2016. Now we're going to carry out the 4th one in 2019 in January. I am sure this will inculcate in the people and in the concerned urban local bodies, municipal authorities, a desire to improve on each front.
New Delhi houses so many important people, and still New Delhi ranks at 65 when we compare it against Mumbai, which has a lot of slums such as Dharavi, etc. So you mean to say through this index that maybe Dharavi is much more livable than New Delhi?
I couldn't possibly disagree with you or agree with you. It is precisely because my colleagues and I anticipated the kind of comments you are coming up with, young lady, that we decided to make all the data available and put it in the public domain. There you will find out why under a particular pillar, a particular city, and I'm not going into one or the other, was graded at point X or point Y. First of all, it's not as if New Delhi is a larger area than the one you described. Then why did people look at it in a particular way? Why did the scoring take place? Ghaziabad, it came from 356 to 38, more than 310 or something. So these are possibilities which are always there, but we did not want in any of these cases to keep back or hold back the data. We want the data to be out in the public domain so that there is a critical evaluation of that data. So people will look at it and they will hopefully come to the correct explanation.
Well, I'm fairly happy as a Mumbaikar myself, but from one research report to another, Kotak and Huron Research Institute have ranked India's top 100 wealthiest women in the country. Earlier today, Shireen Bhan discussed the findings of the report with a panel of experts. Here's that special coverage.
Well, India is creating wealth at a furious pace, and women are starting to bridge the gap with men. This is the finding of a report released by Kotak and Huron Research Institute, which has ranked India's top 100 wealthiest women in the country. Leading the list is Smita V. Krishna of the Godrej Group, a member of the board of Godrej. She has a net worth of over 37,500 crore rupees. That's right at the top. At number 2 is HCL's Roshni Nadar with a net worth of over 30,000 crore rupees. And Indu Jain of the Bennett Coleman Group comes in at number 3. Kiran Shaw of Biocon, Kiran Nadar of HCL complete the top 5. At number 6, we've got Leena Tiwari of the USV Group. She is also an MLA in Uttar Pradesh representing the Apna Dal. Now, 22% of India's top 100 wealthy women come in from the pharma sector, 12% are from the software and services space. Food and beverages, chemicals and automobiles are also among the top sectors where women have managed to create wealth. When it comes to companies, Infosys and Avenue Supermart have produced 10 out of India's 100 richest women, Intas Pharma, Asian Paints, Microlabs complete the list of top 5 companies. Geographically, Delhi and Mumbai are home to 50% of the top 100 richest women in the country, followed by Bengaluru, Ahmedabad and Hyderabad. Joining us now to take us through the findings, Jaideep from Kotak and Anas from Huron. Gentlemen, appreciate you joining us here on the show. Let me start by asking you about the omissions and why we've actually seen those omissions. I know that you've put in a lot of work into this report, Jaideep, but, you know, we don't have politicians, we don't have sports stars, we don't have Bollywood representation. It's largely corporate, both listed as well as unlisted entities that find themselves, or women that find themselves in this report.
I think I will take that question. When we value the net worth of individuals in the report, we only go by verifiable data that is valid. So we might have missed a few individuals. What I normally say is, for every one person who we've identified, we probably miss another one. So the actual list, the size of the list should be probably 200 or 300. But what we're trying to do here is to talk about some of the most successful the stories of companies that have a significant ownership by women. You know, what I always say is, you know, creating wealth is fantastic, but when it's created transparently, it gives a lot of respect. So we've tried to create an inaugural list. Maybe next year we would expand it and possibly look at more such companies or entrepreneurs who we have missed. But this is the inaugural list, and this is the, we looked at verifiable data that is valid legally.
Understood. So let me then ask you, you know, what is the gap that you're seeing between women who have inherited wealth on account of being part of the promoter family, etc., and self-made women, so women entrepreneurs? What's the gap in this list today, and where do you see that headed over the next few years?
I think when we started the India Rich List, as you rightly mentioned, when you open the conversation, when we started the India Rich List about 5 years back, we could only find 4 women in the India Rich List, put self-made and inherited put together, from possibly 1 self-made and 3 inherited. But from there, we've expanded to possibly 100 to 120, which would be in the latest list that we'll put out in a India Rich List that we'll put out in a month's time or a couple of months' time. So number of self-made entrepreneurs in India has drastically increased. If I have to put a percentage, it'll be probably a few thousands of percentage from an Indian Rich List perspective. So self-made entrepreneurs have grown drastically, and of course India still are in very similar to possibly one comparable economy like China, which is about 10-15 years back, wherein women are inheriting businesses but getting actively involved as well. There is a significant gap right now, but this gap is bound to reduce as more and more women get into entrepreneurship, as more and more women possibly start raising funds, take the company to the next level in terms of value creation. So that's all bound to happen. So the gap is definitely reducing, though.
Okay.
In fact, I'd like to add one more thing.
Yeah, go ahead, Jaideep.
Yeah, the thing which I would like to add is that, yes, there would be women who might have inherited the wealth, but there is a significant portion of that which are now taking the company to different levels. So I would not, yes, of course, there would be a clear-cut differentiation between people who've inherited and people who've started the organizations of the firms. But I think ladies who've inherited the wealth and have now taken it to different levels, I see that growing significantly in the next few years as well.
Okay, I see somebody like Indra Nui on the list as well, and that would be because in your report you identify Indians or define them only as Indians who've been born or brought up in India, right? So that's why somebody like an Indra Nui makes it to this list.
That's correct.
Okay. You know, we were talking about the India-China comparison as well. What's the picture like as far as China is concerned today? And we were talking about the gap in India between inherited wealth as well as women entrepreneurs. You know, what's the comparison if you make that comparison with China today?
I will probably add on a couple of more statistics than just talking about inherited and self-made, because that story is going to change anyway for sure. From a China rich list perspective, 70% of the list is self-made, and the number 2 is the average wealth per an individual in the China rich list vis-a-vis India rich list. In the China rich list, the average wealth of a women individual in the rich list is around 6,500 crores. In India, it's around 4,000 crores. Right? So there's a difference there. Then the next thing is on the geographical spread. If you look at the India rich list, or possibly the women representation in the list, it's very concentrated on few cities. But in a country like China, it's very well spread out.
All right, that is the Kotak and Huron research report on the wealthiest women in the country. For now, we'll take a very short break. On the other side, BJP President Amit Shah writes to the Law Commission, making a pitch for one nation, one poll. Special debate when we return.